All right, so in continuation with our Dragon interviews, where basically we're sitting with people with real skin in the game, real world traders, investors across all different assets, different strategies, all again here with the aim of people getting better at the craft of compounding and managing their own kind of money. The next guest we have on is one of my favorites in the game. He's been trading since the 80s, or as I like to tease him, since they were putting people up in crosses. He's obviously seen many different regimes across the decades. He's made tens of millions of dollars for the different banks that he's been at, predominantly on the FX side of the business and predominantly on the proprietary trading side of the business. Please enjoy this interview with the very talented Keith Dack. Dacky.
Wow.
Welcome.
That's a pretty cool introduction. Thanks very much.
No problem. So really excited to have you here today. As you know, when you and I kind of get together talking about markets, we could go on for days. But I just think there's not many people of your caliber background kind of floating around. So I thought maybe we could just anchor a few points to this dialogue. Free flow as always. But maybe we can get a bit on profile, your background. Then we can maybe move over and just give some context on the regimes, because as you and I were discussing a little bit off camera, the 80s, the 90s, and where we are today, 2000 and 2020, very different kind of markets. Would love your kind of take there. Then maybe we can go into kind of the third kind of more fun segment and talk about some war stories that you have seen over the years. People making a lot of money in certain situations, what they were there, your kind of takeaways as well as a trader. From my perspective, I find you to be the most pure form of discretionary trader kind of out there, and I think your style is quite unique. Definitely much harder than my kind of approach. And then maybe we can wrap up with some big picture trade views of 2021, if that sounds okay with you.
Yeah, sounds good.
Yeah?
I mean, it sounds a lot to remember. But
don't worry about that. That's what I'm here for, yeah. Right? So backdrop. How'd you get into the business? How'd you get into the game? What's the interest? Give us context and let's go through all the different places that you've worked, not just from a firm perspective, but obviously you've worked all over the world, right?
Yeah, I mean, I've worked at a lot of firms. I think counting back, it's probably since I started work, we're talking about close to 20 firms.
Yeah, wow.
It's a lot. Yeah. I moved to Singapore in 2007.
Yeah.
And I thought that was going to be my last job, and I'm on my fifth. So I left school, when I was 16.
Yeah.
Didn't do any further education. Didn't go on particularly well with academia.
Sure.
And
this is in London. Are we talking here? Right?
Yeah, in London. Yeah. So I joined a small Chinese bank.
Yeah.
I worked there for a couple of years, and one of the best parts about working at that bank was I got an overall banking experience.
Yeah.
So it wasn't just one particular area. It was the whole shebang. So
and was that like a traineeship in essence that they had, or what was the actual role?
It's just like a junior, a junior bank clerk.
But on the trading floor.
No, not at all. No, it was in a branch. And the branch was in.
So very kind of on the commercial banking side. Yeah.
So it was in the stock exchange building in London.
Gotcha. Yeah.
And I'd say it was a Hong Kong bank. So they had a lot of clients who were exporting goods to the UK.
Yeah.
And they wanted forward cover. So sterling Hong Kong.
Yeah.
And in those days, I used to call up Midland Bank.
Yeah.
To do the cover, and I'd ring up the bank, and this chap answered the line. It was huge amounts of noise in the background,
sure.
And it sounded interesting. So I'd do my trade in £500,000 or £250,000 or whatever.
Yeah.
And thought, wow, that sounds like a very sort of dynamic business. That's something maybe I should look about getting into.
Yeah.
So I went to a headhunter, and I found an opportunity with a bank called United Bank of California, which was which became FICAL, which I think got bought by Nations Bank and Chemical, probably, or JP Morgan, in its later days.
Yeah.
But so I joined as a trainee dealer, and the two junior dealers I was only there 3 months. The two junior dealers left, so I got instantly promoted. And I was being mentored by a guy called Tony Green. Tony was this is the early 80s. Tony was I think in those days, a veteran dollar mark trader.
Yeah.
So he taught me all about the markets, and we were quoted in Interbank. I remember in the early 80s, BHF Bank, it was a big player in the dollar mark, dollar Deutschmark market. Called us, made a price, and I think that day the Bundesbank was intervening. I made 200-point price in $5. I couldn't get out for another 500 points. I mean, it was a lesson. 500 points on $5 million is, I don't know, whatever it is, 170. I can't work it out. $175,000. Instant loss.
And at the start, right?
So it was a good education.
Yeah.
FICAL, I'd stay there for a couple of years.
Yeah.
I decided to move on, and I moved to BCI, which is Banca Commerciale Italiana, which was on Gresham Street. And there was, the boss there, Terry Osborne. He was a great guy. He had a great reputation as a trader. So I became a dollar mark trader from 8 till 4, and then Terry took over when he got back to the office, which in those days, meant we stay in the office quite late at night, getting out of Terry's positions. One particular afternoon, Terry decided the dollar was going up. He bought an absolute cartload of dollars, and it went down. And we traded all the way through New York, even to the West Coast, getting out of position. Terry lost a lot of money. He got his trading limits cut. And I'd been there 2 years, and I was out of a job basically because I couldn't.
Because of the excessive risk that he took, basically, right?
So we cut it out. So after BCI, I joined Bank of Montreal. Bank of Montreal, a Canadian bank in London. I joined as a dollar mark trader once again.
And here you're just pure market making. Do you also have a bit of a back book? I mean, how was it structured kind of back then, right?
So day trading.
And
you'd manage the customer order flow.
Gotcha.
But to be honest, there wasn't that many. BMO, didn't have really that many customers. It's quite funny. I mean, in those days they had a customer, VW. And VW, Volkswagen would call you for prices, but you could also call him back for prices. I mean, it was amazing. Bank of Montreal. Being Canadian, we had a lot of Eastern European relationships. So in those days, you could quote, banks, the central banks like National Bank of Hungary, Czech National Bank. They were actively trading in the markets. Because
obviously this is all pre-Euro zone and the Euro and everything, right? So it was a lot more fragmented back then.
So so I was making them prices through brokers, and then getting out of it. So the first year there, I did really well. Made a decent amount of money. Got a terrible bonus. I stayed the second year. Made good money again. Didn't get paid. One of my colleagues, Les, who was on the forward desk, he left BMO and joined Bankers Trust. He got in touch with me. He'd seen I had a talent for spot trading. He got in touch with me and said, BT's looking for spot traders. Do you want to come around for an interview? So I said, yeah, sure. Went around to Bankers, managed to get the job. They just brought over the boss. The global head of FX was this guy called Kelly Doherty. Kelly was 27 years old, managing the business globally. So I joined Bankers as the dollar Swiss trader.
So when's this now?
1987.
And just for people who maybe don't realize the significance, can you give some context of what Bankers Trust was back then? Because it's my understanding this was the place to work for at that time, right?
It was without a doubt, and right across the business, BT were the pioneers in risk taking.
Yeah.
The options book. I worked with a guy named Andy Krieger, and Andy was running billions of dollars.
Yeah, this is in the 90s, right?
No, this is in the late 80s.
Okay.
Wow.
Yeah. So
Andy
now,
was, how we really established our business, because he was managing massive risk, and we were executing it. So there was a bunch of guys in London. He'd call in, I want to sell $1 billion mark, billion K, a billion K. I want to buy $1 billion cable, sell $2 billion yen. I was trading dollar Swiss, and buy $250 million Swiss or something. It's a tiny little amount. But what we got in those days was everybody wanted to quote us, because they all knew which way we were. All the currencies were correlated, so we're selling dollars across the board. So they call up the markets 50-55, and make you 30-35. We give them, because we've got so much to do. So instead of transacting for Andy, we decided to do it for ourselves. So we would call out, we'd sell $200 or $300 million.
Sure.
And then we'd call out again, and everybody thought we were sellers. So this time they'd pitch it down, we'd pay them. It's like, that's not allowed. So and that was the start of how we started to to build the businesses as a group. But it wasn't just spot traders. The options traders were running big positions. And right through the group, there was teams outside of FX which were managing FX risk. BT was I didn't have limits at Bankers. I could trade.
I've heard that from a lot of different places. Like those incredible risk takers there.
I mean, my daily, every day I'd have $200 or $300 million spot position. I traded from, we started at 8 o'clock, we finished at 4 o'clock. I'd trade 8 hours solid, and even longer. We had a reputation for quoting people. So if anybody wanted if anybody wanted to move a large amount of money, a large amount of
you were the place
currency,
to go to.
they would call us. We put a price in it. We managed the risk.
And just 2 points on that. First, for people who maybe don't understand what market making is, right? Would love to get your take and your explanation, as well as also what you think constitutes a good market maker, maybe also how it's helped you out in your game, and then maybe let's just take that part first.
Well, I mean, market making is taking an intraday position. And in the old days, it was really judging how the market was positioned. I mean nowadays it's based on a lot more fundamental
and the spreads were
factors.
bigger back then, right? As well, right?
But I mean bigger, but also more. The market was a lot more liquid.
So you had the best of both worlds, basically.
I could run big positions. I could, if I wanted to get out of position, I could flip up to $1 billion in a call. So in those days we used to have interbank relationships. So JP Morgan, would have a $20 relationship. The Russian would have a $50 million, $100 million relationship. You can call them for prices; they can call you.
Gotcha.
And so you've got a spot desk. There's maybe 5 spot traders, 5 assistants. You've got 3 girls at the end of the desk getting calls. You've got the options desk. You've got the forward desk. You've got the sales desk. Everybody had their designated calls. On a one call, the market's 50-55. We're seller. Down to 20. Hit everything. And then it's. I mean, you can imagine the noise and the pandemonium going on. It's a huge adrenaline flow. In this arena. And
on the part of bankers known for a place that takes a lot of risk, I've always felt that you can have all the risk management systems and metrics that you want, but it really, culture is the main thing. I mean, how was risk kind of handled there? Why were they not more blow-ups? Was they just like there was consistently more people making money over time, or was it just lucky kind of time to be in the markets? Or what's your view when you kind of look and think back on that?
I don't know. I think it's hard to say. I mean, if you look at I think the quality of the traders was definitely. We had some great spot traders. The proprietary traders. I mean, the whole machine worked as a as there wasn't all these different cogs. It was all working as as one engine.
And kind of like a real meritocracy, because I mean, to me, like a 27-year-old running that size of that business back then, I mean, it says, I think, a lot about the firm. Like, that would even be an issue today, potentially, right?
Yeah. Well, I think Kelly at 38 was vice chairman. So
wow.
Yeah, I mean, he was definitely designated for for higher things.
Yeah. Okay.
But,
so then you were bankers, right? And so
I was at BT for 7 years.
yeah.
I mean, generated a lot of a lot of profit, and most of it is day trading.
Yeah.
Is making I don't know $1 million a month
Wow.
every month on average.
Yeah.
Some months were better.
Yeah.
But every day you come in, and there's a load of so many opportunities to
Gotcha.
to make money. You compare that to nowadays, it's incredibly difficult to make money. I think Volcker has a big impact on the trader's ability to make money.
Banks not being able to participate, right?
Yeah, exactly. Yeah. I think the other factor is that that all the business is channeled into the main the main liquidity providers.
Sure.
There's probably a group of 20 banks which see all the business now. In the old days, the business was spread across 200 banks.
Gotcha.
So within those 200 banks, there was all these guys prop trading, market making,
Corporate needs, stuff like that. Yeah.
So I think that's why it's a lot more difficult to make money now than what it was
Gotcha.
30 years ago. So,
Gotcha.
but,
And then outside, I mean, let's not go through all 20 plus places that you worked, but outside of Bankers, do any other stints, for lack of a better word, stand out? In particular, I know you ran the macro prop team at UBS for a while as well. Any others stand out in regards to your progression as a trader and cutting your teeth at this craft?
Yeah, certainly. So. Actually, my next job after Bankers Trust, I joined Salomon Brothers.
Again, another one of these places like you had to be there kind of thing, right?
Yeah, and it was an unbelievable place. My boss in London was Paul Brewer. Paul, went on to become a, very successful fund manager.
Yeah.
Hans Hufschmidt, who ran the business globally, he went to LTCM, which didn't end particularly well. But after that, he set up Globop, which it's a fantastic business. I think it's a middle office, back office for hedge funds.
Yeah.
And Solid it had this great reputation. Paul tried to hire me in '91, and I was having my best year ever.
Yeah.
And I've made a ton of money, and I was like, sorry, you can't afford to pay me what I'm going to get paid this year. So a couple of years later, a couple of guys had moved from BT. David, who run the business, he moved to New York.
Yeah.
JK was the dolly end trader. He left. So it's kind of had a different flavour,
Sure.
So when we were there at the beginning, everybody worked for each other. If I had a big position in dollar mark, the cable trader was pushing the market my way. The dolly end trader was pushing the market my way.
Yeah.
Towards the end of it kind of changed a little bit. So
a little bit more sharper elbows, people doing their own thing.
Yeah, exactly.
Gotcha.
Yeah.
And was that just like a cultural shift from a leadership perspective, or was it what changed, right? Because that's obviously a big difference, right?
Yeah. I think David moving. I think David was. David didn't have a book, so he was the manager. He oversaw the business, so he kept an eye on everybody. Yeah. I think him going to New York, and eventually he went to Renaissance Technology.
Yeah.
I think that's when the kind of culture shift.
That's interesting, because again, it comes back to incentivization, right? So we get compensated as a group, or is it silos, right?
I mean, the great thing about B2 was you knew exactly how much you're going to get paid.
Yeah.
You made $20, you're going to get paid $2. Whatever the formula was. So I kind of in '94 I decided. Things are changing a bit. So I reacquainted myself with Paul, and I joined Solis, and I mean, it's a great place. They run massive proprietary risk.
Sure.
And I joined the year I joined, they had an unbelievable year.
Yeah.
Yeah, so
What's an unbelievable year for Dacky? Just to give us context, obviously, right?
I was saying they had an unbelievable.
Oh, they had an unbelievable. Okay, gotcha.
Yeah. I think my best year in the market was 20 odd bucks.
Yeah.
$24.
Yeah. But I think there's also like an important part in trading and career that it's also stuff both on the field and off the field that affect the overall pathway, right?
Yeah, no, without doubt. Yeah. And you mentioned UBS prop.
Yeah. Because I think that's what brought you to Asia first. I don't know if I'm remembering that correctly.
So I was there was a job opportunity at Dresdner.
Yeah.
I was working on the prop desk in Dresdner, London.
Yeah.
And I'd had some managerial experience, so they asked me if I was interested to go and manage the FX business in Singapore.
Sure.
For Dresdner. My wife, she was covering Asian central banks.
Yeah.
So she was always travelling to Asia. So we thought it was an ideal opportunity for both of us.
Yeah.
The only trouble was the firm that she worked at, they did an office in Singapore.
Yeah.
So my boss at the time, Eddie Listoli, he said, "Okay, don't worry about it, we'll hire her." So
love it.
Yeah. So
love
end up.
But it's also smart, right? Because
I wasn't so smart in terms of I had to sit next to her for 2 years.
okay, maybe not from that sense, but I was thinking in the sense of, I was wondering, wow, I guess it probably varies from relationship to relationship, right? But I was thinking from a risk management perspective, right? If you're trying to look after your employees, you want them happy and you realize that is partly on the job and that's partly off the job. So I suppose they're trying to bring it together, right?
Yeah. So, I mean, it's a unique experience.
Yeah.
I mean, probably not many people get the opportunity to sit, within 2 meters of their wife.
Yeah.
In a, at the time was the global financial crisis.
Yeah.
And she was she was one of the best producers at during that period. So
she was a trader as well?
She was central bank sales.
Wow. Okay.
So she had some great relationships.
Yeah.
Brought in a ton of business.
Awesome.
So she reported to my boss, and that was the way that we got around with that we got around it.
Yeah.
I remember going in to see a central bank, and I was head of sales and trading, and she was central bank sales, and we got introduced as Miss Conti and Mr. Dack, and the central bank knew that we were husband and wife, but. It was all approved, all above board.
Sure,
nowadays I don't think it would be possible.
It would fly, but, fair enough.
It was quite funny. And so I was at Dresdner. We had the acrimonious merger with Commerzbank.
Yeah, I remember that. Yeah.
And during the merger, I got given the role of head of fixed income trading for Asia.
Yeah.
For Commerce in the new business. I moved over, our team was about 22 traders.
So you're still in Singapore at this time?
Yeah. So 22 traders, and out of, I think there was only 25 traders in total.
Yeah.
I think it was 3 treasury guys for Commerzbank.
Sure.
As I say, it was quite acrimonious, and I was quite happy to leave, to be honest. And I got a phone call from a chap by the name of David Tate.
Yeah.
David's an amazing guy. He used to be the Dolomite trader at Goldman's in the early 90s, and that's where we knew each other from. But since then, he'd had a fantastic career, and he'd been hired by UBS to set up this internal prop group. So it was really like an internal hedge fund. Huge limits. I think our group had probably $200 million stop loss overall.
Wow.
Yeah, so
that's impressive. Yeah,
it's big limits. So I ended up managing a team in Singapore. The 4 of us, so decent stops. I was an MD, getting nice MD salary.
Yeah, which is very different from MD salary today, right? Obviously.
Well, I don't know. I mean,
no, it is. Trust me, I know.
It's pretty decent. So.
But compared to then, it's not the same.
Yeah, and then. We had fixed payout as well, which was unheard of. At a modern bank. So it was a great business. We did. So our team in Asia was myself, Farouk, Gerard, and Terence.
Yeah.
I mean, Farouk is probably the best the best trader I've sat next to. You know.
Okay.
I mean, he runs an options RV book,
Yeah.
and he's built his own models. You know, when to buy vol, when to sell vol. He's just a incredibly smart guy. You know, mathematically.
Yeah.
You know,
Full package kind of individual.
And
right.
and also a great guy. As well, which is.
So this role at UBS sounds like a one of a kind of setup, huge risk limits, amazing opportunity, and now you're kind of stepping up to running even a bigger team. How do you put that band of brothers and sisters together?
Well, I mean, to be honest, it was a combination of factors. I think throughout my career, I'd been a trader, I'd been a manager, I'd been a prop trader, so I had a lot of good contacts.
Yeah.
But I think also, David Tate, David, was the manager of a business. David's background was pretty much the same.
Sure.
He was a spot trader. Then he went to Citadel. I think I've been to a few hedge funds, Bluecrest, Citadel.
Sure. All top shelf names, right?
Yeah. So, and it was a combination. I mean, David's, it was David's final say, but he was interviewing. He interviewed a lot of people. And there was a lot of scope to add people as well. To the group. But we end up getting some great guys.
So, but the people that made the cut versus those that didn't, obviously, if you knew them and you had to demonstrate a track record, then it's a little bit of a no-brainer, I suppose, right? Or as close to, I suppose, a no-brainer as can get. But what about if you didn't? And I'm not trying to say that this is scientific. I believe there's also some kind of art to this. Do you have any kind of context, again, generally just speaking, who made the cut and versus who didn't? Was it maybe also a function of your view, like you thought maybe that part of the market's going to be dead for maybe even a year or two, or how did you?
No, I think a lot of it's I think a lot of it is you're trying to find people who are going to fit in.
Yeah.
Trading prop is probably you're siloed, to a certain degree.
Yeah.
But you also want some kind of information flow. And at that particular place, it was, I'm definitely a person who shares information.
Sure.
So I'm looking for people who are quite happy to do the same. So maybe that's a reason for hiring a person as opposed to somebody who's more
sitting quietly in their own place and not really kind of contributing to it.
So I think that's a key factor. I think also their performance. Yeah. You're not looking for people to who've got volatile P&L.
Sure.
Yeah.
And going back on the options maker that you said was probably one of the best traders you've ever kind of come across. Can you maybe give us a context of two on why he really stood out from all of the again very successful people that you kind of came across, right?
Yeah, I think because he managed to build his own options model.
Yeah. So he went deep and did the heavy lifting himself.
Yeah.
Right?
Yeah. So and he had a great feel for the market as well.
Yeah.
I think those are.
And can that be taught, or do you think that's you're just kind of born with it?
I think you gain it through experience.
Yeah.
Being in situations. He was a market maker before.
Sure.
I think when you're in a day trader's seat, you get a feel. You get a feel for how the market's positioned.
Yeah. The current, the flow, strong, weak, so on.
Yeah. So I think that's I think that's an important factor.
Sure.
And you see it. When you're looking at option expiries, trading the expiries.
Yeah.
If you've got that background, I think it makes it a lot easier to take advantage of those opportunities.
Yeah, I mean, I definitely look back and with a lot more, let's say, respect at maybe some opportunities I would have had to go down the market making route, because you do get, I think, this, eighth sense or whatever you want to kind of think about it, that is very hard to get if you've never had to make prices, and more importantly, make prices when you know there's something happening and you're not sure if there's a lot more, as you said, behind whatever position you're taking or offloading, right?
Yeah.
So that was UBS, and how'd the team do, and what was the overall next steps from there?
No, we did great.
Yeah.
So the business ran for 2 years. Unfortunately, we got closed down, not because of anything that we did.
Sure.
So, we made a pretty decent amount of money.
Yeah.
But UBS, they had a chap in London who I think he hid a couple of $1 billion of loss.
Yes, of course, yes.
And
the back office guy, right, or something like that?
No, it was a Delta One trader.
Oh, they had access to it, the back office, right?
Yeah. And so the UBS ended up closing all their, they didn't want the reputational risk, so they couldn't afford to have, like a prop group,
I think there's something else that's not appreciated in the business, because that's just pure bad luck from where you guys were sitting.
No, without doubt.
You guys were executing,
delivering. It was a great job.
Yeah.
We had fantastic liquidity, relationships, access to pricing, research. It really was a standalone prop team, segregated from the rest of FICC.
Gotcha.
So these things happen. It's life.
Yeah, it's a shame, right? Because obviously everyone in the team has a family attached to them. You're in a location and everything, and it all kind of goes tumbling down, right?
But that's the way it is. So you move on. And I had a few opportunities at the time. I could have gone down the hedge fund route. Yeah. I spoke to a few people, had some good opportunities, but I ended up taking a job at Jefferies to set up their FX business in Asia. Yeah. Which I thoroughly enjoyed. Yeah. Small team, we did extremely well. Yeah.
So what is this, 2009?
This is 2000. No, that's later. 2013.
2013.
Yeah.
Okay. Yeah.
So I was at UBS for 11 and 12.
Yeah.
And that's 2013.
So so it's this post GFC, you're at UBS during Eurozone crisis, so 2013, so we're kind of getting out of a lot of like the funk that was going down in Europe, right, in essence.
I mean Jefferies had their problems. They got downgraded, which caused us problems because of forwards, trying to transact business for clients. So, if people don't give you forward limits, it makes it a bit, or give you limits at all. Makes it very difficult to
build a business.
But I mean, I kind of when I look back, I kind of regret not going the hedge fund route then.
I mean, I was surprised at that as well, given your background. But again, everything's a formula, right?
No, without that. And at the time, it was a great deal, and I took it, and I had four great years there. So I can't, you can't backtrade.
Sure.
So
clearly not, unfortunately.
And my last job before my current job, I worked for. I moved to a family office, and they had investment management business part of that, and they set up a multi-strat fund, which I took an FX portfolio in, and thoroughly enjoyed. I mean, because the person's family, Steve Diggle, whose family office was, Steve, he made a lot of money during the global financial crisis. He had credit funds. After 2008, after the GFC, that strategy didn't work, so he set up a family office. Yeah. He's had some great investments, but he decided to set up a multi-strat. First loss multi-strat. So the managers involved, you had to have skin in the game. So it's your money. You put up money. Diggle puts up money, or investor puts up money, and off you go. I stayed there 4 years. The fund closed, unfortunately. We couldn't raise any money for, I don't know for what reason, but
we had the performance. I think, weren't you up like 50% or something your first year?
Yeah, me personally. But also the funds. The fund was up first year 17.5%. Second year 12%. Third year 17%. So you would have thought that we would have gained some traction, but we didn't. I don't know whether people didn't think it was scalable. I don't know, but
I think this is a great point, because rationally you think like you just need the performance and the capital comes, but as you and I know, that's not the case. The people with the most amount of money have the best marketing, right? Yeah, it's not just delivering numbers.
And it takes time. I did some of the fundraising,
and that's a tough gig by itself, right?
Yeah, without doubt. And at the time our fund was pretty small, so we were targeting high net worth. So in Singapore, you'd meet family office, you'd meet them 3 or 4 times before they write you a check. So there's a lot of
knocking on doors.
But I think one thing it taught me was my performance was great. Because I become far more, because it's my money. and I hate to say it, you become far more disciplined, you know, in the way you manage money.
Sure.
And not to say that, you know, if somebody
that
gave
you
you
were undisciplined before. No, I get it.
Yeah.
I get it.
Yeah.
I mean, it's, people
So-
react very differently to managing their own money versus others, and sometimes it can even be the opposite,
Yeah.
right? Where people will take more risk with their own money, right? So it's
so
yeah.
I think it's, you just have well, for me, I just had a higher conviction level.
Sure.
You know, so it was, you know, I don't want to lose money. You know,
Yeah.
so I was very managing the downside. So I
Yeah.
used options as a way to manage. You know, so you pay a premium. You know exactly how much you're going to lose.
Yeah.
So you can manage the downside. You know, and you got unlimited upside. So
Sure,
you
sure.
know, it's not just you know, a low vol, you know, it's not just a low vol way of managing position.
Sure.
But yeah, so my performance was, you know, was really good, and it was because it was high conviction. So the trades which I was doing at UBS, you know, were probably lower conviction, and
A lot more, I'm assuming, as well, right?
Sorry.
A lot more trading, probably. I'm
Yeah,
assuming.
no, definitely a lot more trading.
Yeah.
Yeah.
Which also makes sense because you know, you start as a market maker. That's what you're doing all day,
Yeah,
right?
yeah.
Right. So I'm assuming then the P&L kind of distribution was a lot chunkier, right? It was certain points of the year where you just had chunk here, or no?
Not really. No, I mean, if I look at my P&L over the 4 years, I think, you know, 60 months. That's 5 years. No, so it's 50 months, I think it was.
Yeah.
And I lost money maybe, you know, in 4 months, you know, out of that.
No, but I mean,
So-
when you make it, right? Because you were just saying here that you're not trading as much as you used to
Yeah.
when you were at this multi-strat umbrella kind of, you know, family office,
Yeah.
right? Yeah.
No, I mean, yeah, the US elections I made in 2000 and, what was that, 15, was it?
It was 16, because it was
16.
Brexit, right?
Oh yeah,
That's when you made your...
Brexit was June 15, right?
Yeah,
Yeah.
2016, I believe, though, right? Or was it 2015? I can't remember. It's been so long
Yeah.
now. I'm pretty sure it's 2016 because I think it's 4.5 years. But anyway, let's go with 2015. Yeah, you
Yeah.
know, you're a Brit, so I will lean to you being right on this one. So yeah, I think it was actually 2015. Yeah.
Yeah. So,
Okay.
yeah, it's
Sorry.
terrible.
Just so many things have happened, man.
Yeah.
You know, it's like, which vote are we talking about? There was even the Scottish one, remember, right? So that's
Yeah.
okay. And then we'll get to Brexit and all that soon enough. And then, and what's your setup now, and where are you? Right.
Yeah, so I work for, I just joined a new company in August.
Yeah.
And it's called In Touch Capital.
Yeah.
And we're a 24-hour FX commentary service.
Sure.
So we provide commentary and analysis to, a typical client is bank, sales and trading,
Yeah.
hedge fund managers,
Yeah.
and pretty much anybody who's trading FX, you know,
Yeah.
it is a type of client that we're, you know, that we have, or you know, that we're looking for.
No, I've seen the offering,
Yeah.
and I'm obviously a fan because, especially for someone like me who can't always be at the desk, it's a great way of coming back and catching up on what's been happening during the day, especially if you've seen some adverse price moves. So,
So our team is, it's a mixture of traders.
Yeah, with global distribution as well, right?
Yeah,
So,
traders,
So across all
strategists,
time zones.
economists.
Yeah.
So we don't take views, but there's definitely a bias towards our towards our writing.
Yeah.
Yeah.
Okay.
It's funny. I spent 40 years not telling people what position I got, and now I've got to sit down and write about write about what I'm thinking.
Yeah.
Yeah.
So all the years of you making fun of me writing about what I'm thinking, right?
Actually, I just read a book called was it Journalists for English? Or
Okay.
Yeah. So it was very helpful.
Yeah.
It's
an art, right? It definitely is. It's you know, there's the idea, and it's not too different from capital raising, and then there's the pitch and the story behind it, and giving people the context, right? There's no doubt about that. So, okay, that's great. You know, moving on, I think on the perspective of maybe just one or two maybe war stories that we can actually put on camera. But also kind of maybe with the caveat of tying it to kind of trading psychology. Do you have something that you can share? It could be P&L related, positive, negative, and maybe you can give us a little bit of the setup on maybe the event, maybe what you were thinking, or was it something that maybe you had planned before, or something that you reacted on? Because I've also found your timing, especially like on an intraday kind of basis, can be very, very, uncanny, almost supernatural.
Yeah.
So,
Well, I guess that's from years of experience.
Yeah.
And you definitely see repetition in the market.
Sure.
When something happens, something else happens.
Yeah.
And if you've seen it before, you know what's going to happen.
Gotcha.
So I think that's been very helpful.
So it's almost like a ripple kind of effect, right?
Yeah. So I think in '98 was the Asian financial crisis.
Sure.
So I'd probably my best ever day, and my best ever day. I should have made $20 million that day. I made less because I ended up making 12, I think. But,
Sure.
It still wasn't it was a tidy sum.
Yeah.
I was working at Namura and I was managing the business there, and I had an inclination that dollar yen was too high.
Yeah.
So I bought I bought some low delta 1 week dollar yen puts.
Yeah.
And dollar
Low delta
yen,
being what, 10% out the money, 15?
yeah, probably 10 deltas.
Probably 10 delta, yeah.
So no, it was just 1 week.
Sure.
10 delta dollar puts.
Sure.
Decent size,
Yeah.
$250 or something like that.
And was that because you were expecting the move to be intimate or pending kind of that day or within the next kind of few days? Or?
Yeah, I had a strong inclination that there was going to be some intervention.
So, and then I'm assuming like if nothing had happened, then you'd have just closed them off and recouped whatever premium after a few days.
I think it was one of those trades
you were happy
where...
right off,
Yeah.
Okay.
So right off. And, so that was on a Friday. I bought a chunk of puts 1 week.
Yeah.
And on a Monday, BOJ, lucky enough, they come in and dollar yen went from 142 down to 110.
Wow.
So
That's a
as I
monster
say,
trade.
Yeah,
Right?
I mean, I should have made a lot more, but there was, we had some books which weren't particularly good. So being a
So what
client,
did those options make? Like, what was the multiple and the return on them? It must have been.
well, I can't even remember how much I paid in premium,
Yeah.
but
I'm saying it must have been like a 10x plus trade.
oh no,
or
it's
something,
probably 50x, I'd say.
Wow.
Yeah.
Wow.
Yeah.
Wow.
Yeah. So
Yeah.
it was
That's amazing.
it was huge.
Yeah.
I think that was one of it was definitely my best day in the market.
Yeah. I think you only have a few of those in a career, right? Well, you only need one.
no, but at the same place, I had I was trading a lot, into Asia,
Sure.
because of the Asian crisis. So I had a Thai baht Malay position.
Yeah.
I think it's about $50 worth of each.
Yeah.
And Bank Negara decided to peg the ringgit.
Yeah.
That immediately cost me $6 million.
Oof.
I get a phone call 1 a.m, go to the office. It's not a particularly nice phone call. Get up.
You're down $6 million. Yeah. It's
Get up, have a get up, have a shower.
would wake you up though.
Go to the office. We had 24-hour destiny.
Oh, I'm surprised you even took a shower, man. That's yeah.
But I mean, the good thing about it was, there was nothing good about it, but the MAS they settled everything. So at the time, dollar Malay was 415.
Yeah.
They pegged it at 385. Everything got settled at 4.
Okay.
So I only lost 3 million, and I had this short dollar Thai baht position, which I think in the end probably didn't cost me a lot of money. It was,
Sure.
Yeah. I had a big dollar Hong Kong position at the same time.
Yeah.
And I got another phone call at 1 a.m. And dollar Hong Kong, I'm pretty sure it was a carry trade.
Yeah.
Dollar Hong Kong base 775. I get a phone call, dollar Hong Kong's low 750s. This can't be right. It's like they're supposed to be defending the peg.
Sure.
So I called up a friend of mine, Mickey Hillier. Mickey was the head of trading at FX trading at HSBC Hong Kong.
Yeah.
So I called up Mickey.
Because you're obviously still in London at this time, right? Hence all these late phone calls, right?
Yeah. So Mickey. I was in London still, and I called up Mickey. What's going on? He said, I don't know. He said, but if it doesn't come back, I'm out of a job. Yeah. So I think that at 750 that was a $10 hit or whatever.
Wow.
Yeah.
Wow.
But lucky enough, and what I heard, and I don't know if it's true or not, the trader had either gone to lunch and hadn't reloaded the bids, or he'd gone to the toilet and hadn't reloaded the bids.
Gotcha.
And that's why.
So everyone came in and they saw that as a mark to market, right?
And I looked on the charts. I can't find that. But I didn't dream it.
Yeah. Well, fair enough.
So those my
some of the big ones that stand out.
I mean, one other story which I took on Paul Tudor Jones one day.
Oh,
which so yeah, and this is bankers allowed you to do this, so sitting in the office from you used to get in the office at 7, so from 7 to midday, nothing going on.
Yeah.
And dollar marks 30, it's like 5 pip range, 32, 37, sitting there, and then 32 given, 30 given, 20 given, get phone call, Tudor, and in those days, Tudor and More Capital, the big hedge funds,
Yeah.
they would line up maybe 6 or 8 banks or 10 banks,
Just
hit them all at the same time.
Yeah.
I mean, why you'd ever agree to that? It was like seeing the flow. So it was like,
Yeah.
So pricing 100 marks. I don't know. I can't remember what I made him. 15, 20 or whatever.
Yeah.
Yours. So I go into my broker. I go, I'm 10 bid. And he's like, yeah. So I end up given $500 million, and I sat there. I sat there for the next 3 hours trying to get out of this position, and it was like, no, it's like I said to myself, there's nothing going on the whole morning. What does this guy know that I don't know? He's just probably just woken up in wherever.
Yeah.
And he's looked at the market and sold. It's like, so that was my one and only time that I decided, and it didn't cost me much money, but it could have done. But it was just pure, I guess.
And do you think maybe, I mean, it could be so many reasons, right? I mean, for all we know, he was hedging something. But do you think maybe that was also the rationale maybe on his side? Because I could see the argument, hey, there's nothing going on. Maybe if I smack it a certain direction, it will run, right?
I think whenever he hit it anyway, the market normally run away from it. Run away from it.
Yeah.
So
okay.
But I was just an angry man that day.
Fair enough.
No, but I learned my lesson. I was like, these guys, they're a lot smarter than you are. So.
Yeah.
But it was fun while it lasted.
Yeah. Fair enough. Fair enough. Yeah. So before maybe we get to your thoughts on trade views in 2021. I would just love to get your feeling, like when I say currency, right, and I think that is the asset class that you are, the proverbial shark in. That's your pool, right? How do you think and how do you look at that market? How do you approach markets? If you had to, somehow give a blueprint, that's kind of one question I'd love to ask, and then maybe also in cohesion with that, if you had to explain your trading style to someone, what would it be? The viewpoint that I've gotten is your style it's never something I could even try and hope and replicate, because it seems to be very almost scalping, right? Very much kind of tied to, and this is me, feel free to obviously kind of correct me, very much tied to kind of the desk and so on and so forth, which, totally makes sense given your background as kind of a market maker. But to me, it just seems like also a very strenuous kind of, way to kind of make money.
Yeah, scalping is probably not the right word.
Okay.
Yeah. So, I mean, nowadays, for the last 5 years,
sure.
The portfolio has been, the way I decide on trades is, you delve in. You have a view on the dollar,
sure.
I think, or you look at currencies and you look at currencies which you want to buy. You look at currencies you want to sell.
Sure.
And then out of those currencies, you pick, the best one, or the best one you want to buy, the best one you want to sell, and put an RV trade.
And so for years, it's just like having like the backdrop, like, I want to be structurally long Aussie in this environment, or does it just flip around in essence? I guess what I'm trying to say is, you have like a bias first from a view perspective before you move to actually positioning the book, right?
Yeah, without a doubt.
Yeah. Okay.
Yeah. So I read a ton of research.
Sure.
So my view is fundamental. But it's not long-term fundamental. I might have that view for multiple months.
Sure.
But my outlook is normally over some kind of event, and whether it be the RBA or the Fed or
gotcha.
or an election or whatever.
Gotcha.
So there's normally some kind of So I'm taking a position 1 month or 2 weeks in advance.
Sure.
And I'm looking for this kind of outcome.
Gotcha.
And I'll trade around that view. vanilla, using vanilla options. So the initial positions are always in vanillas, and then use some exotic options to leverage the view.
Yeah. And what do you mean by when you say vanilla and exotic options?
So you'd buy 30 delta. If you think Aussie's going up, you buy 30 delta calls.
Okay. So that's a vanilla, right?
Vanillas, yeah. And exotics you might buy an RKO. So I mean RKOs are they're quite difficult to manage because you've got a knockout.
Yeah.
So but it's the same direction, but you're going to get knocked out if it goes too far in your favour. But
so it has to go just right.
Yeah,
right?
And you can hedge the RKOs by buying. So you could buy as it gets close to expiry, you can buy vanilla calls to hedge the RKO. So I did a ton of these over the years. I've got also I think with my spot background, I've always had a good nous for the expiries and how spots trade around the expiries.
Yeah, I can imagine. Yeah.
So I've had some great results. Where it's expired. I remember once I had a RKO 3 big figures in call and expired five pips away from the knockout.
Yeah.
It doesn't happen very often. Normally during a course you get knocked out.
Yeah.
But you can place your vanillas in front.
Sure.
And you generally you can make money out of them. It's like idea generation. You're looking for currencies which you think are going to go up.
Yeah.
I do use technicals, but only to confirm levels. So.
This was something that was very surprising to me. Right.
I've never taken a position purely on a chart.
Gotcha.
But in the old days, I would look at charts and that's the resistance level.
Sure.
I'd be a spot trader. I'd want to jam it through. You can't use those words anymore.
Yeah, sure.
Yeah, or you call out and push it through.
Yeah.
You're buying for yourself to see to get the price action at that level. Whether it's a strong resistance or
not.
Or there's momentum buyers kind of come in if it goes through that level. So
basically test the boundaries of the trading ranges, right?
Yeah. So I always use those levels. I've always used chart levels as something which I find interesting. But for portfolio construction, I would use maybe a chart level for a stop loss or nowadays, as opposed to trying to move it through. And then once you've got a position, is like continuously updating it.
Yeah.
I never ever take profit because I've got an idea of where I'm looking to take profit, but. You're continuously getting up, news information coming in.
Sure.
So, maybe something happens, you just grow out of position because you don't like it. So, you have to be flexible. I think you have a firm stop.
Yeah.
And in options, that's your premium.
Sure.
In spot, you put a firm stop in, and then you're flexible and you take profit. I think that's always a way that I've traded. Yeah.
All right. So. Just as a wrap-up segment, and obviously, Dacky, would love to have you back next year for a few kind of quarterlies where it can be a little bit more related to actually this. When we are looking now towards 2021, we've got a new U.S. president finally, and we also know there's some vaccines on the way, and all of these were literally questionable just even a few weeks back, right?
Yep.
So I'm just kind of curious. What are your views and thoughts in regards to kind of 2021? Like, what's top of mind based on everything that we kind of know now for you?
Well, let's hope the vaccines work. That's
Good point. Yeah. A lot of people are just making the assumptions. Of course, they're going to be a slam dunk.
Hopefully, AstraZeneca is probably needed to do a bit more work on theirs. But so I pretty much. With consensus, which
what is consensus though?
Well, I think consensus is bearish dollar.
Okay.
Probably steeper curve. Central banks I think managing the front end.
Yeah.
The back end moving up at some stage.
Yeah.
Though the Fed might try and control that I think in the near term.
Yeah.
So I think if you get steep curves, you're probably going to get a weaker dollar.
Yeah.
And then it's really the economies which are coming out of the cycle, this downturn quicker.
Yeah.
And you've already seen it. China, New Zealand, I think, surprised a lot of people. The central banks had to make an about turn on their views.
Sure.
So places I like, I think China's still a great place to invest.
Yeah.
Real yields, high, the highest in Asia. Probably, globally they're pretty much up there.
Yeah.
If you ignore some of the smaller countries. They've got since the introduction of the global bond funds.
Yeah.
I think that's in October 21. But
sure.
People are already starting to invest. There's investors in China who want to invest. There's overseas investors. The economy's seems to be doing okay. So I think CNY is a currency I like to own.
Yeah.
And I think from CNY, then probably you probably want to own currencies which are associated to that.
So the whole kind of North Asia.
Yeah, Korea in particular. I like Australia. I think Australia's economy is going to come out of the lockdown, I think, pretty well, and you probably see them replicate what New Zealand's done.
Sure.
So I think that's going to cause the RBA some problems. I like Indonesia, not just because I own property there.
We're here to talk our book.
No, I bought it at the highs in 2014.
Hey,
so
someone had to.
Yeah,
right.
exactly. But I keep a close eye on Indonesia because of my investments. But I think the omnibus law, which I just passed, is going to clear out a huge amount of red tape.
Yeah. Do you want to give maybe just a quick 101 on exactly kind of what that is, the omnibus law?
I don't know a huge amount about it, but I think it's like 80 laws which are just going to be
compressed to
make
5 or 10 or something like that. Yeah.
No, but actually no. Those 80 laws are going to be, there's so many provisions within those laws. Yeah. There's thousands of provisions.
Yeah. And this has always been the issue with doing business or investing in Indonesia, right?
Yeah. So
it's forest of red tape.
It's horrendous. Yeah. So all the red tape's is going to go. The real yields in inflation's at 1.4% in Indonesia. It's incredible. It's so low.
Yeah.
Interest rates are still high.
Yeah.
It's a lagging currency. The currency. There's 3 currencies in Asia which are still weak against the dollar this year. It's Thailand, Indonesia, and India.
Yeah.
They've just come out of lockdown in Indonesia. The government has just launched a sovereign wealth fund.
Yeah.
They put $5 billion in. The US has just said they're putting $2 billion. The rest of the money is probably going to come from outside. There's a huge amount of FDI going in.
Yeah.
So
that's great demographics, and was it over 200 million people or something like that? Is this right?
More? That's a lot more. Yeah, 300 plus, I think.
Okay.
350 million. Okay. Yeah. So. To me, it's got high yield.
Yeah.
There's a lot of reasons to own it. So that's I think Asia is definitely the play. I don't particularly like Europe. The European economy, and this is the same as everywhere else. They're in lockdown. So I think that's going to, they're going to come out of that later than everywhere else.
Sure.
The US. The data has been, covered up by, vaccine hopes and what have you.
Yeah.
There's no stimulus. I don't know what the Fed's going to do. I mean, the Fed will be able to look at, what, they've got the continuing resolutions on the 11th of Dack.
Yeah.
So if there's no stimulus attached to that, then the Fed will probably, have to act again. So I think that's another factor to weaken the dollar. Yeah.
You think that's like a Q1 thing, or also subject to Georgia and if we get some kind of relief package in regards to the Fed?
Yeah, I've actually had a bet with Todd, my colleague. Todd thinks that there's going to be stimulus attached.
Yeah.
Whereas I just don't see it happening until is it 20th of January?
Yeah. And then he gets sworn in.
After then.
Sure.
Yeah. I mean, obviously, if Georgia. Georgia's going to be interesting. I mean, it's a clear Republican seat at the moment, but I don't know. Trump's not particularly endearing himself to people at the moment, so who knows how that goes?
Sure.
So that's something. That's something for the future. I
Yeah.
think.
Gotcha.
Sterling's. I hope we get a Brexit deal.
Yeah.
I mean, it's going to be a bare bones deal. And apparently, there's a lot of pent up demand for sterling on the sidelines waiting. We have to see. Yeah, I don't know. I mean, I've got the only UK asset I've got is my pension. So, I'm kind of hedged. Yeah.
Fair enough.
Yeah.
Fair point.
Yeah.
Yeah. Okay. Great. And if you just had to have, for argument's sake, one high conviction view for next year, $100 million position, what would it be and why? Because you've kind of given us expressions of what you're feeling, right?
I think
Outlook-wise,
long
but
CNY.
long CNY.
Yeah, I think that's probably.
Yeah, so you think we go back to 620, something like that? From,
Yeah, I
'cause I
think
think
so.
we're with 685 as we do this, right?
No,
Yeah.
650,
650?
58.
Yeah, it's had such a huge move, right? It's
Yeah.
hard to believe that we were at
Yeah, it was
720 at one
720
point. Yeah.
not so long ago.
Yeah.
Yeah. I mean, come down from 685 when they started talking about the inclusion of WGBI.
Sure.
Yeah. So, I mean, Korea, that's had a great move this year.
Sure,
Last few months.
Yeah, I mean, China just held up North Asia and is
Yeah.
taken up high.
So,
Yeah.
I mean, a lot of people have had this trade on, long Chinese bonds unhedged.
Yeah.
Yeah, that's worked pretty well, I think.
Yeah, no, absolutely.
I can't see any reason for that not to carry on.
Okay.
Yeah.
Dacky, it's been a great chat. Very, very last question from my side to you, and unless obviously there's something else that you'd like to add.
Yeah.
If you could have a billboard in
Yeah.
all the major financial centers globally,
Yeah.
and you could have anything on it, what would you have?
I think it'd be to my 4 kids. I still love you, and I miss you, and I'm looking forward to seeing you because I haven't seen them for a while.
Gotcha.
So,
Given COVID and everything.
Yeah.
Yeah.
So
Very well
that's it.
said. Dacky, really
Cool.
appreciate your time.
Thanks
Thanks
Kay.
so much.
Yeah. Thanks, man. Cheers.